So let's just talk about this 9-month earnings of this EMP, indigenous exploration and production company called Seplat Petroleum. There was released. Anything but positive when you look at the top line items. The results, in a way, however, mirrors the global oil industry currently hit by a number of headwinds. But let's see what's left in the barrel of oil as we turn to Mustapha Wahab, who is the oil and gas analyst at Chapel Hill, Denham. He's here live in our studios. Good evening, my friend. It's good to see you.
Bosen.
We've just given some of the highlights of this Seplat Petroleum's earnings. What else can you harvest for us?
I mean, I think you are right. Seplat is the only listed oil and gas exposure in the company in the Nigerian stock market, right? And generally, I mean, whilst we know that Seplat's performance is actually very poor, we don't think that Seplat is alone in this sort of environment. I mean, we're in a period where oil prices are low, production are also down, struggling to meet the level that we saw in 2019. But for Seplat, I mean, what we saw was that the company has been able to reduce loss after tax from about $110 million that we saw in H1 2020, now down to $96 million. And that was basically helped by, tax credit that the company reported, in Q3 2020. If you strip out that sort of tax credits that the company reported, what we mean is what you will see is that Seplat would have reported about $126 million in loss after tax over a 9-month period. Now, in terms of analyzing, I mean, the data from the top, what we saw was that, I mean, as you displayed earlier, revenue was down about 21%. That was basically because of the fact that crude oil price, were materially lower compared to what we saw last year. I mean, if you remember in Q2, we entered a period where crude oil price actually touched the lowest level that we've not seen in a really long time, right? But, I mean, unfortunately, production for Seplat actually went up by about 7%. That was just not enough to sort of mask that weaknesses that we saw for oil price. That's why we saw, revenue significantly reducing by more than 21% over 9 months 2020. Beyond revenues, on COGS leg, we also saw materials significant pressure. I mean, COGS was up by about 26%. And that was basically because of the fact that now, if you look at Seplat's numbers today, you will see that all input costs, royalties, DDM are now, inclusive of all of the consolidated numbers from Inland acquisition. If you remember clearly, Seplat actually acquired Inland, late last year. So the impact of that was what basically put a lot of pressure on COGS. If you go down to OPEX, what you see is that, the key driver for OPEX leg is basically the reported impairment charges of roughly $58 million in that period, and that's basically reflective of lower oil prices, just basically in compliance with IAS 36 that the company had to report that sort of massive impairment charge. So generally, what we saw for Seplat is that earnings is down. I mean, earnings is down 96%, but it's a lot better when compared to what we saw for H1 2020, and that was basically helped by tax credit. But the good thing for Seplat is that despite the sort of weak numbers that we saw, I still think that Seplat is a fantastic company. I mean, revenues on Q3 standalone base alone, we've seen revenues is now starting to recover. I think revenue grew by about 10% in Q3 on last year, on the respective period of last year, right? And beyond revenues leg, Seplat still remain a fantastic company as far as balance sheet is concerned. Cash generation for the company is quite strong. I mean, I think that, as our full year 2019, Seplat had, about $300 million in cash on the balance sheet. But today, cash is down roughly to about $200 million, and that's still sizable as far as we are concerned. So, yeah, that's I mean, basically what we saw for 9 months for Seplat.
I'm just trying to find out what Seplat's earnings and today's conference call actually reveal about the state of the oil industry, at least in Nigeria, to start with.
Yeah, I mean, first of all, what management actually mentioned, which we found, maybe negative, first of all, is the fact that management has now postponed, I mean, the delivery date of Escravos evacuation pipeline. I mean, they basically said that it was due to the delay in accessing the terminal, which would have, helped reduce reconciliation losses as well as, help, assure revenue to a significant extent, right? But beyond that, the positive news that we saw from the conference is that, management has confirmed that ANOR project is still getting set to deliver its first, gas production by H2 2021. That move for us is actually quite instructive. But in-house in Chapel, what we think is that, Seplat going forward can still deliver at least $515 million in revenue. That's assuming average realized oil price of about $43 per barrel, and also crude production of about $46,000 barrels of crude equivalents, right? But beyond that, we now think that 2020 might be the first time Seplat is going to be posting another loss after tax. First since 2016. I don't think personally that the company can make up for the losses that we've seen over 9 months in Q4 2020 alone. That's basically our views as far as the outlook is concerned for Seplat.
What about the crude oil industry in Nigeria in general?
So, come again?
What about the crude oil industry in Nigeria in general? What does this really say about where we stand right now with oil prices and the wider industry issues?
Yeah, thank you, Bosin. I think that, it's a general knowledge that 2020 is actually an erratic year. And what we've learned so far is that crude oil price remains the king as far as E&P players is concerned. And when we say crude oil price is the king, what that then means is that a lower for too long oil price would basically means that, upstream oil and gas companies actually are going to be suffering materially, especially as far as revenue generation is concerned, right? I said earlier that Seplat earnings is generally weak. Given the fact that oil price is lower compared to what we saw last year, we think that most of the unlisted names too must have reported almost the same sort of numbers. And we've also seen that as at 9 months 2020, we've seen companies like Seplat reporting significant impairment charge because of lower oil price. That must have affected other players. So in this sort of environment, what I think generally is that companies would basically be implementing some sort of strategy to retain cash or to implement some sort of cost reduction strategy. These are some of the strategies that is more or less likely going to keep E&P players afloat in this sort of environments that we have right now.
A quick one in just about a minute. When you look at big names like ExxonMobil, Chevron, BP, Shell, the global industry is not in a very good state.
Exactly. I think the story is also the same for global, heavyweight companies. But it's a lot more problematic for those sort of companies because if you go by history, companies like ExxonMobil have, tried to use significant revenue generation from their midstream segment, such as refining, to sort of cushion the impact of significant deceleration in upstream revenues. But this year, it's an really unprecedented year. Both upstream and midstream are actually suffering significantly. That's why you are seeing companies such as ExxonMobil reporting an unprecedented, loss after tax of close to $1.7 billion as at Q2 2020, right? So right now, what we're seeing those sort of companies doing now, they are now implementing significant and aggressive, cost cutting strategy. I hear that ExxonMobil, for instance, is going to be laying off close to 1,900 staff in the US. That just basically shows that this sort of company are now using cost reduction strategy to sort of at least keep margin constant.